Aeon's investment philosophy is based on the conviction that significant inefficiencies can occur in the market at different times across a range of asset classes and strategies. For more, the group's Chief Investment Officer, Asief Mohamed, joins us from our Cape Town studio. Asief, always a pleasure speaking to you. So let's start with some key themes that you see unfolding going forward, and perhaps these are hot opportunities for investors out there. And the first theme that we're going to talk about this evening is food scarcity and how we can capitalize on that in the investment environment.
Yes, food is a big issue today. The global financial crisis has in a sense kind of hidden away the fact that there's a problem with the global food crisis. Globally, you've just seen in the US one of the longest droughts we've had that's coming through, and the corn prices have gone up more than 50%. That is probably an indication of things to come. You're going to have a lot more volatile food prices going forward. Part of the reason why you had the Arab Spring, and specifically in Egypt, and also in the other Arab countries, because of high food prices, and you're seeing it all over the world. You're seeing today also in Africa, a lot of African countries going through a stage where a lot of people are hungry, they don't have enough food, and you're seeing potentially longer term, you're seeing uprisings there. So it's going to have a big change on our landscape. However, from an investment perspective, what do you do in this environment? You'd probably look at investing in farms in the longer term, but that's a bit illiquid because you have to invest in them and hold on to them for a very long time. So one area that you could go for is specifically you could have access to ETFs, and Warren will probably talk about this later, where you could have access to ETFs on soft commodities, agricultural commodities, and that's possibly one area where you could invest in.
Asief, just to explain this to the audience, I mean, we hear about this looming food crisis coming up, but I've always understood that if the food supply grows at the rate of human population growth, we should be okay. But recently, we've looked at a few articles around how the changing diets of emerging market consumers is going to create this food shortage. Perhaps you can just explain the thesis for this as to why all of a sudden, since time we've been able to supply ourselves with enough food, why are we getting to this critical juncture at the moment?
Part of the reason is that we've got a population growth of 9 billion plus, and that population hasn't peaked yet, and it will probably continue growing, especially in the emerging world. You're talking about China, India, and in Africa, and also what's happening is that you find that a lot of the yields, agricultural yields, are also starting to fall. Soil or ground has been over-farmed as such. And the yields are falling, so you're having that you're getting that mismatch in terms of growth. And also what's happening in the emerging markets, and you've alluded to this, is that you find a lot more urbanization. And because of urbanization, the emerging consumer in these emerging markets, and many of them, there's about 2.5 billion just in India and China alone, they're on average consuming more food. So it's a combination of factors that's increasing the demand for food globally. And as people urbanize, as they get more and more educated, they want to eat more. On an average, they eat quite a bit more, and that's going to create the shortage in terms of the demand and supply.
Asief, beyond the soft commodity ETF that you referred to a little earlier, surely there's some direct equity plays that you could embark on here to take advantage of the food scarcity theme.
Yes, the one area specifically is fertilizers, and we know that the chemical companies produce them. And in South Africa specifically, we're talking about AECI and Omnia, possibly also to a certain extent Sasol, because some of the chemicals that's produced is being used in fertilizers. The other company, although it's a small portion of their earnings at the moment, is a company such as BHP Billiton. They bought a potash company, I think it was in North America somewhere a few years ago. Phosphates as such, potash specifically, it's used as a fertilizer, and there's enough potash around globally. But what's going to happen is there's going to be a bigger demand for it. But this whole theme about the global food crisis is not a one-year theme as such. It's a couple of years. It's about at least 10 years. So it's something that's not going to happen overnight. So when I say you need to look at BHP, Billiton, Omnia, and AECI, and these chemical companies, and fertilizer companies specifically, it's not an overnight thing, it's more a longer term. You're talking at least 5 to 10 year theme that I'm talking about.
Asief, just on that, obviously when you talk about a big macro theme, macro trend like this, where you've got the requirement for these compounds and resources that go into the production of composts and these things, from an investment perspective, you look at a company like Potash Corporation in Canada, which has got a fantastic resources, will be a big global supplier. I think it already is a big global supplier. How do you adjust your investment approach to investing in these companies, even if they look fully valued at the moment? Do you add, because of this big trend and this opportunity, do companies that would be fairly valued in your eyes look undervalued based on a long-term view like that?
Yes, then it's a very long-term view. If I'm picking up the correction, I think BHP Billiton has either a stake in the Potash Company of Canada, or they have a stake in another company. So you can get an indirect stake in a company through BHP Billiton. I'm not too sure where else globally you would be able to get exposure other than the 2 local companies that I mentioned, specifically Omnia. It's got an exposure to the agricultural sector, and to a certain extent AECI. So that's the only 2 companies that I can think of, and other than the ETFs that I mentioned. But again, it's a much more longer term view. It's a 5 to 10 year view. And in the meantime, you could find prices falling. You could find prices of these fertilizer companies also falling before it sees a long-term uptrend.
Asief, I'm just cognizant of time, and we've got time to touch on the other theme that you brought to the fore, and that being water scarcity. Now, this is really dinner table talk at most dinner parties at the moment. There's got to be at least one conversation on the fact that we are going to run out of water, or we are going to be faced with water shortages in the near future. Again, I'm going to ask you how you see investors capitalizing on this imminent threat.
It's very difficult, to get access to water as such as an investment theme. I can't think of anything offhand. But more, what I'm saying is it more builds on the whole issue of the food scarcity crisis, or the global food crisis, because you won't have enough water to if you might call it, irrigate agricultural land. The problem with water is it could potentially be solved, but then you've got to increase the price of water considerably over a period of time. If you look at a place like Singapore, how they price their water is at the marginal cost of producing an extra liter of water. And how do they produce that extra cost of water? Through desalination. And as we know, the cost of producing an extra liter of desalinated water is about 10 times more than what we're paying here in South Africa or other parts of the world. So yeah, so you've got to think about that, where in the long term water prices will have to go up if you need to conserve water, because that's the only way to cure wastage of water. But it has many investment implications. If water prices go up so significantly, the one thing that comes to mind is that cool drink prices, soft beverages as such, their prices are going to go up, and people are going to consume less. So they might sell less on the one hand, or you might sell less beer, because for every bottle of beer that's produced, you need 4 bottles of water to produce that beer. So there are many implications, but it's something that we've got to be cognizant of and think about in the long term.